What is up, boys and girls, ladies and gentlemen, day traders, closet swing traders? I hope you guys are doing absolutely fantastic. We got some early birds in the house today. Good morning, Albert. We got Bill. Good morning, Chad, Chris. Cindy is here. Craig, my boy Craig Levine's in the house. What is up, Craig? Doug KK. Dude, how have you been, man? I haven't talked to you in a minute. We got D. Good morning. We got Doug. Fayaz, good morning. Greg, GW, Inga's in the house. It's my girl right there, Inga. Jason P, hope you're doing well. My boy Jay Linder's in the house. We got Joe, John Ag. You guys are waking up early. Kundan. Is it Kundan or Kundan? I'll say Kundan. I'm going to go Kundan. Lawrence, good morning. He said either is fine. All right. We got Liza in the house. Good morning, Liza. Michael Holt is waking up early. Man, Pam's here. Quantran, good morning. Rich, Tony, my boy Rock Fullwood is in the house. Tony is here. Will, Yovaris is here. Ooh, the crowd is piling in. Good morning. We got YouTube land waking up bright and early. Of course, you guys want to wake up early. This market is crazy. The fact you guys are here means you survived yesterday, which is, just one day at a time. One day at a time. Yeah, we do got that dream team in the house. Craig is right about that. He is absolutely right. Let's switch on over to TradingView. Let's take a look at a few things. Let's talk about the Fed meeting yesterday, what it all means, and what we should expect. Just on a broader sense of things. So not really reflecting today, because even in a down market, you could have a bullish day. So I don't want to get there yet. But the rate came in normal. Not normal. 0.75 is not normal. But Patrick's here. Good morning, Patrick. So the rate came in 0.75. That's what people were expecting. Like I said, if they came in with a full point, I think we dropped 3 to 5% yesterday. So we stayed away from that. But we still had, I forget what we dropped, 2.5, something like that. So we just still got close. A lot of the reason was the thing we talked about yesterday, where they have their forecast report. So the numbers in there really didn't change that much. But the future Fed rate did increase, right? So to me, a lot of, and without seeing any changes, it's kind of like the Fed isn't really paying attention or doesn't seem to have a grip on reality. And I think the markets kind of showed that yesterday by just tanking afterwards. He said pretty much they're looking to raise rates until 2024. I think Tony was on the mic yesterday. If any of you guys were here, I don't know if it was before or during or after, whatever the case, that the rates came out. I forget exactly what time frame, but Tony has a good point. He said, historically, looking back, there has not been a bullish market while Fed has raised rates. That could mean that we are in for a good 18 to 24 months of bear market. This selling could get a lot worse, but don't freak out. Don't freak out. It's all perspective. Number one, we do all know how to short the markets. We could buy puts. We could short shares. We could sell calls if we ever get rallies, kind of like we did in this zone. So there's a lot of money. There's a lot of ways we can make money in this market. Don't let it freak you out. In fact, usually after we go through a recession or depression or anything like that, the market comes out stronger and people are usually better off, right? This is going to be, we're going to see some opportunities in the market in the next 18 to 24 months that we have not seen before. The market being one of them. I'm a strong believer. I think real estate's going to be a big catalyst going forward as well. Yes, interest rates will still be high, but I think we start seeing rates, like actual prices, housing prices come down, mortgages stay up. I think rent will still stay up as well, just because again, people don't want to, even though housing prices come down, the rent will still be high because people still don't want to take out 5%, 6%, 7% mortgages, 8% mortgages, right? That's expensive money, at least compared to what we've seen. Right, we've seen historically there was higher times as well, but the people that are sitting there in cash that don't need to get the mortgage, get the house, have passive income, I think there's huge opportunities ahead in real estate. And getting back to the stock market, I think there's going to be. I've been saying this for some of you guys know. I mean, I'm probably annoying for the amount of times that I say this over and over again, but I think a lot of stocks still need about a 50% haircut, right? Maybe slightly lower after yesterday, but we'll see. But I think based on pure valuation of when I go through all of these companies, especially getting into the for the long-term investing room that we do on typically Mondays, a lot of stuff is still wildly overvalued, right? So allowing some of these things to come back, and I mean, right now there's maybe a handful of stocks that I'm really looking to buy, add for the long term. I do think going into some of the dividend stocks, some safety plays, I think that's where the market starts to hide, because again, you still don't want to just have all cash. Typically, with inflation probably roughly going to be this year 7.5%, something like that, it's going to work out to. Your cash is even losing, right? It's just not losing as much, even at 2% interest in a bank or something like that. You're starting to see some of the other avenues that are safety plays starting to increase some of the rates. People are going to flock there, I think, for safety for a little bit. But Hector says cash is trash, cash flow is king. Exactly. Yep. And that's why I think too, and I know you're going to be doing real estate throughout the next 24 months, but I think we start to eventually see housing. I think it's starting to come down. I think it is. And I think people sitting with cash will have the opportunity to be able to get really, really good deals in real estate and get some of that passive income. And again, just even the dividend rates, things like that. I think some of those safety plays, the MOs, things like that are going to be solid. Coca-Cola's, Abivai, any of those companies that are paying the dividends, I think they might still come down, but just not as much as some of the unprofitable companies that we've seen already taking 80% cuts from highs, 70% cuts from highs, 90% cuts from highs. I don't think it's time to buy those yet. I think there will definitely be a time, but even some of the companies, the Nvidias, the Apples, Apple probably does have to come down a little bit as well. I mean, I still wouldn't be buying at 153. AMD probably comes down a little bit further. Tesla, I think is just a beast in overvaluation, and I love Tesla. I like everything about them. I think they're completely at an insane multiple at this rate. I think they have to come down. But again, all of these companies, I think they do come down, and that will give us a good opportunity in the future. Companies with good fundamentals will be popular again. Fundamentals are going to be absolutely crucial. I agree, 100%. See a video about what announcements that could have. Richard says, I don't know if you take suggestions. I'm Richard. I'm here all day on the ones and twos, just taking requests. I don't want to offend. I would like to see a video about what announcements that could have been significant effect on the market. Yeah, we could probably put one out. Yep. It was mainly, I mean, anytime the Fed talks. So yesterday we had the FOMC meeting. Those are always going to be highly anticipated meetings that will move the market a lot. And yesterday it was more so the outlook. It's called SEP. The SEP report, which comes out, the last one that came out was in June. They're giving their future guidance pretty much from the Fed. Growth in spec stocks will suffer to an extent. Yep. Everything will suffer. This is not a good close yesterday. That being said, getting into the world of day trading, right? Because again, long-term investments will come down, and see it as an opportunity. Don't be fearful. Continue to buy on the way down. You don't have to be the first one to rush in. You can wait a little bit, slowly grind into some of the stocks. You don't have to buy the same stock every month. Find the ones that the valuations start to make sense, and those are the ones. Otherwise, looking at this chart, I mean, not the best close. If you're a bull, if you're a bear, not bad. The only thing that I could say is we do have somewhere around this 376.99, so we'll just call it 377. We have a longer term VPOC high volume area where we could look for some kind of a bounce. Again, typically the market's not your friend. If you do want to short, and if you're taking out puts and you're like, man, I need some kind of coverage in case this thing drops. Yeah, you could get a put. You're going to be paying a lot of extra money on those premiums, right? This is not the time to short, but if we don't know what's going to happen, I mean, this thing could just drop nonstop, and you're going to wish. If you are going to go with puts, go very, very small. This is a spot to go very, very small. If there's a bigger bounce in the future, start adding, get more aggressive. I think over the next 18 months, the play is sell any rips that come in. That's the plan that I'm going to be sticking to. And I do think we're at some level that we could see some kind of, at least a little bit of support in the market. So we'll see if we can find any 10 EMAs, if anything kind of fits the plan. That was a wide day yesterday. My guess is for the most part, everything is inside, except for the first stock we look at, of course. That one is gapping down. So at least for right now, it opened. Amazon will qualify for a 10 EMA. DJ Doom and Gloom. I want to say DJ Doom and Gloom. I would go DJ Realist. I think the economy's still got a lot of work to do. I don't know. And also, I feel like a lot of people would not hire DJ Doom and Gloom. It's just depressing on their wedding day. So I gotta change the adjectives. Amazon, we have a little bit of support, very little, but we do have a little support somewhere right where we're kind of opening 118.17. I'd probably be looking for some kind of a bounce bullish, retest some of this down move to some extent. If that number breaks, if we end up breaking this 118.17, 118.15 zone, there's not really a lot of support on this thing until probably we get into the 115s. So we do have some room to the downside. I'll be very patient. On this one, what I would probably see, since we are at a little bit of a bounce spot, I don't know if we open under it, we break higher, whatever case. It is technically a retest gap. I would be looking for something like this. And I'd probably wait for that initial break, rebounds, and something like that. And then look to short here. Otherwise, even on MU, I don't know if it was yesterday or the day before, but big gap down, looked completely bearish, and it ended up being some big, massive engulfing candle. I don't think Amazon does that. But we don't know how far this thing could maybe come up to retest this 122 zone. I'm not exactly sure. So I'm not going to just randomly short. I'll be patient, wait for some kind of dip, break that level. That should be a retest. And then that's the zone I'll probably take it in. So at least that's my plan on Amazon. Otherwise, we're pretty much, for the most part, just in the middle of, I mean, not a lot of interest from institutions at this point. We're smack in the middle there. And it is technically a retest gap. So it will qualify, but I will be patient on it. Bad for marketing for sure. I know. The marketing team behind DJ would not appreciate that. Like, well, you just made our job a lot harder. Apple doesn't look too good. This dotted line is a longer term VPOC right here. Clearly, we broke and closed over it. I would be looking for that spot right here as a spot too short. We probably do get some kind of a bounce on Apple. There's this is our zone on Apple. If we end up closing below there. There's no real support until roughly 150. And we do have a VPOC that was not tested back here as well. This is going to be somewhere in the 149.69 zone. So somewhere there would be a little bit of a stronger support. But for today, at least, again, we might get a little bit of bounce. Or at least I'll be watching the 153.50 zone a lot. I don't really want to see a close below that if I was bullish. And if I was bullish, I would be going, don't do that to me. Otherwise, shorting somewhere around 154.86. I'll even set a little alarm somewhere over there, just in case we get some kind of a bounce. I'll know that's an area that I'm interested in, maybe looking for a short. And right now, Apple, depends on where this thing opens. I mean, we're very close to yesterday's close, but right now we are in a zone that does qualify. So we are getting a little bit of a gap down, actually. I'm actually a little surprised. I thought a lot of these things would not qualify. Nvidia, here we go. So Nvidia also, no, Nvidia does not qualify by a few pennies. Lucian's in the house. Jordan is here too. All right. Yep. So Nvidia does not qualify by a little bit. You have a good solid looking hammer from 2 days ago. We've been making higher lows. We do have a little bit of an uptrend that looks to be broken at this point. That would be, at least on a short-term basis, something like this. We should have a VPOC holding us up. Well, the last VPOC was 132.30. We're opening below that at this point. There's not a lot holding us up. I'd be looking probably for a retest into this 132.27 zone for potential short. Again, this one will not actually qualify. That alarm is going to go off right at open. And then next stop on, or at least the next immediate stop will be somewhere in the 130.47. I would be looking for this one to retest at some point. This is 129.09. Technically, this one from this candle right here did retest it. So we opened there, we came back, pulled back, retested, and probably go lower. Nvidia has a 10 EMA. Yeah, it does look a little bit more on the choppy side. I just don't see a lot of free range yet. If I had to pick a direction, it'd be short, but short higher, short as high as possible. AMD. Again, I was dead wrong on most of these things won't qualify. for the most part, they're all gapping down slightly. AMD is in a very bad spot. AMD might become one of my new favorite shorts. I'd be looking for, wow, that's not good. At this point, just what I'm looking for is all of this volume that institutions were bidding on, pricing at. That is all going to act as some type of resistance at this point. And we are barely holding on to that little bit of volume that came in at that price. We are slightly at or below previous VPOC. And yeah, if we don't open above that VPOC, I would be looking for a decent short on AMD for pretty much all day. We'll see where this thing actually opens at, but not a strong. That looks the weakest so far. Tesla, Tesla, little bit of a gap down, still in a little bit of a chop area. We've seen Tesla be absolutely bullish. Woodshed absolutely nail this thing on his head as to a good spot to short. He was looking for, actually, I don't know, maybe he didn't get in. He was looking for like 314. It only got to 313.99. but we are gapping down a little bit, and very strong resistance on Tesla. So we got peak, peak, peak. Even though this thing's been very, very strong, we're now back below a very larger time frame volume area as well. And again, pretty big sell off. I would be looking for a short on this one. Maybe again out of the gate, we can get some kind of a bounce. That's your opportunity to buy some shorts. You could probably even buy some longer term puts on this one, especially if we get any kind of a bounce into this 302 area. I don't know if that happens, but watch that 302 area very closely. And we'll see if we get some kind of puts. I'll probably look for probably November, December, something like that. And this one looks like we're starting to break some kind of a bigger uptrend that we just had. Again, could this just be an honest retest into 293? Yes. Either way, you still make some money to the downside. But based on the overall market, there should be enough force to bring this thing down to some of these other levels, even coming back to 267. So AMD looks good for some puts. Tesla looks good for some puts. Tesla does qualify. So yeah, out of the gate, we're going to get everything. Again, big sell-off yesterday. I think there's definitely some fear in the market. Be watching for that retest. And I just want to think of perspective for somebody that actually has a job and responsibilities, but besides DJ Doom and Gloom. If I was at work all day yesterday, not really paying attention to what's a job, I don't know. People throw that word around. It's a soft J. It's a hob. It's a yob. If I was at work all day yesterday, not really paying attention to my portfolio, came back yesterday, so the entire market selling off, I might be throwing some orders in. So actually, what I think happens on just from looking at a lot of these charts, we probably get one red candle down. People are like, okay, this is it. We're just going to crash. Then we come back up, and then this happens. I think this initial spot would still be the bears feeling a little bit comfortable. And I'm using Tesla as an example, but I think probably so far in a lot of things, we might get that one or two red candles down from people just freaking out. The bears are still pretty comfortable in this trade. I don't really see a reason why they would want to bail. It's got a lot of room to fall. And then I'd be looking at after that dip comes in, that's when you get some of the bears start locking their profits. And then that's a better time to short. So maybe we actually get a little red out of the gate. This little chop in the beginning of the day, scare some people out. Tony says you said puts for November, December. Yeah, I like to give a little bit of time. So I'd be looking at probably worst case November. And by the way, we did say historically, September is a pretty bearish month. So honestly, we're just kind of feeding into it. STFR. Mario says, starting your online courses this weekend, been trading a year now, still stuck in the break-even zone where I make great returns, then turn around and lose them. All right. I mean, think of the perspective as if like, I don't know, maybe you have another job. Mario says, pick the worst year to learn, maybe, but pressure makes diamonds. Whew, that's deep. That's deep, Mario. I would say you pick the best year. The best time to plant a tree was 10 years ago. The second best time is today. Y'all don't feel me. But yeah, why not learn in the craziest market in a very long time? When we get out of all this, yeah, I mean, this is gapping up, but there's not a lot here. Yep. The biggest thing that you'll learn is from this market is patience. A lot of traders, I mean, if you think back to 2020, a lot of traders got in one of the easiest markets of all times. A lot of those people are not trading anymore. A lot of people haven't seen this or learned how to deal with this type of market. And all of the gains that they made, for the most part, They probably wiped out. They're not excited about the market anymore. Day trading is rigged. Investing is rigged. Swing trading is rigged. Real estate's rigged. All right, if everything's rigged, where are you going to put your money? You got to do something. You got to do something. Learn in the difficult market. Honestly, if you're break even and you're a newbie trader in this type of market, imagine what you could do when the market actually starts flowing correctly and not all over. Everything is news dependent. Everything is based on the Fed coming out. And if he blinks 3 times, that means we're bearish. If he blinks twice, that means we're bullish. Like, this is a great time to learn. DJ Dan just elevated to motivational Dan. Whew. All right. I don't know. It's the coffee today. It's the coffee today. But everything is perspective. Everything is time-based. Everything, honestly, every single thing. Like, if you're going through it today and you're like, man, I wish, why did I go long yesterday? I should have been short. I was over trading yesterday. Learn right now. Look at your account right now. In 10 years from now, your account is going to be much bigger. I'd much rather learn the lessons on a smaller account. And I don't care if you have $10,000 in the account or you have $500,000 in the account. It doesn't matter. In 10 years from now, if you're following the plan, following the process, your account will be bigger in 10 years. No matter what your starting point is. I'd much rather lose today, figure out trading today, than 10 years from now after the account is much larger. And now I'm seeing these type of markets, not knowing how to deal with them. Right. So you guys are actually setting yourself up pretty fantastically, but it is hard to see in the moment. It is hard to see if you're breaking even, if you're losing a little bit, it doesn't feel like you're winning. But trust me, follow the process. It's there for a reason. Hard times create strong people. Good times create weak people, and weak people create hard times. It's a tongue twister, but I love every single word of it. I started when AMC and GME were squeezing. I thought it was easy. Yeah, I know. I don't know if you were around real life trading, but I was like, this isn't going to end well. that was my sentiment. I was like, this is not going to end well for most people. Still paper trading in prep for funded account. I love it. 9 R's on scalps yesterday. That's crusher. Killing it. Everything falling pretty hard. Yep. So, and again, what I thought could happen is we start getting that little bit of a freak out in the morning from, oh my God, the world is ending, the market's ending. We get that little bit of sell. We rally a little bit. This is probably now the shorts finally covering some taking some profits. And after that rally, that's where we want to short. That's what I think happens. So market coming down right now, I think is okay. Again, I don't want to jump into a short right out of the gate. Everything will qualify, so everything can be set up for a 10 EMA. And I might even go long on something, to be honest. If the risk to reward is good, I might go long on something. Most likely, I'll probably sit out the longs. That's what I'm at least preparing to sit out for the longs, wait for the bounce to happen, and then short the bounce. That will give us, I think, a stronger opportunity to make some money. But if we're looking at something and I'm like, you know what, this we at least could make a 1.2, 1.4, 1.5, something like that on the rip higher for a retest, then I'll consider it. But I think the easier money is going to be short after patience kicks in, after we sit on our hands for a little bit. And that's how I'll be looking to play it. But unfortunately, we only got like 30 seconds. Oh, man, that sentence wasted 2 seconds. But now we got a whole lot less. Just enough time, though, for anybody in YouTube land to make sure you guys hit the like button, hit the subscribe button if you're already not. Just keep in mind, today does not decide the rest of your career. Just think about that for a second. Whatever happens in the next couple days, couple months, couple weeks, I mean, it's a learning experience. Grow from it. You guys will all be okay. Take everything slow. Make sure you guys fully understand the power of investing, the power of day trading, and what that could actually do. Don't lose sight of the overall goal. And YouTube, I will